G'day and welcome to this week's video. My name's Robert Gowdy from Consortium Private Wealth, and this week we're going to have a quick chat about the continual reinvestment that businesses do into their products and their services, and how they use their capital to further their revenues and profitability ultimately. And if you continue to increase your revenue via reinvestment back into the business and profitability, then the valuation of the business goes up over time. So we're going to have a look at a number of businesses that are doing this continuously. Some very big businesses, some of the biggest businesses in the world, and also small businesses that are starting off their journey. So if we go and have a look at the screen and the PowerPoint presentation that I've put together, I'll just set this up a bit better than what I have. Very good, right to go now. So one business that we've liked and we've spoken about in the past is Ripe. Now Ripe is a Microsoft partner that sells subscription software, so Office 365, Azure cloud storage to businesses. And what they've done recently is they've taken money and they've allocated $3 million to kick off a joint venture in Japan. So that is that constant reinvestment. So quite often businesses, make their profit. They don't pay the whole lot out as a dividend to their shareholders. They pay some of it out as a dividend, but they keep a good amount of it back, and that's what gets reinvested. So whilst the market may have seen this as a negative because profits are being redistributed back into the business to help it grow, I see it as a complete positive. So that's Ripe expanding into Japan. More recently, they acquired a New Zealand business, and this New Zealand business works with Microsoft products and also VMware, and these are software products that Ripe already use. So this business is adding value to some of the Microsoft products that they're already selling. So that means they'll be able to on-sell on an ongoing basis. So that's, in one sense, the Japan business is creating a whole new business. They didn't ask investors to contribute to that at all to make that happen. Here they're using cash to acquire a business. Then we're going to have a look at Magellan, a business that we've followed for many years, and we know it's a very high quality business, very scalable, similar to Ripe. And what these guys have done, they've been being very creative over their whole life, 10 to 12 years, and they've now got a new product offering, which they're launching new products all the time, and this is to be a competitor to the more passive, lower cost index funds. So they've now got a new core offering which will look after a different segment. So this is research and development within their business to offer new products and ultimately increase revenue and therefore profitability. Again, Magellan just recently has done a deal with Barclays and some very well connected investment bankers around Australia, and they now got a 40% ownership in an investment bank, a brand new investment bank called Barrenjoey. Now, how successful this investment bank is yet to be seen, and they've put in a huge amount of money into this, $45 million in cash, and they've issued a whole heap of Magellan shares, so totaling around approximately $150 million in investment for a 40% stake in the business. So again, they are reinvesting, being very creative, and ultimately increasing revenue and profitability, which will increase the value of the business over the longer term. Now, if we just move to some of the bigger businesses in the world, and we'll just have a look at Microsoft to start with. Now, this is on Microsoft's website, and we can see here, obviously I've moved pretty quick, so you probably haven't got a bit of a gauge of what this is. But this is essentially a list of their acquisition history. So this is where Microsoft have purchased businesses to complement and add to their existing products and services. So this is going back to 1994, where they've made a Soft Image is a business that they purchased. But if you can just see the breadth of the acquisitions are just constant. 2018, 19, and in recent times they've bought this top one here is a business in gaming, a game developer. So it is just constant. You can see here in 2020, 1, 2, 3, 4, 5, 6, 7, 8 acquisitions in this year alone. So pretty impressive stuff. We'll have a quick look at Google as well, and you can see here again, well, we've got 238 acquisitions, and that is from August 25. So this is just constant. 2020 going all the way back to 2001. Now, in addition to the acquisition of businesses that complement what they're currently doing, all of these businesses are reinvesting and improving their current product suite. So I read an article recently, and with they're going to make YouTube like a shopping channel. So we can be presenting and saying how good this mouse is, and within the platform you can go and buy this particular mouse. And so that just creates obviously more revenue streams, more eyeballs watching that the things that people are promoting you can buy within the system. So it keeps the eyeballs on the platform, keeps people there for longer, and therefore more revenue, ad revenue, and possibly a share in product sales as well. Who knows? These very big businesses have the capital just to keep acquiring and keep reinvesting. I hope that was a help. It's one of the reasons why I believe investing to businesses is the best way to accumulate wealth above all other asset classes. Thanks for listening, and we'll speak to you soon. Cheers.